Good evening. Ira Epstein. Nice to be back. I had a week off, as you know, last week, and it certainly is a pleasure to be back. I started on Friday, and again, back I am here, and I feel very refreshed. All right. So it is right now 6:10 p.m. Central Time. This is your financial market wrap-up, and it is November 13th, 2023. So tomorrow's a huge day. I mean, here's what we get. Tomorrow's big report day is going to get the U.S. October CPI number. And it's forecast to be up 0.1% month over month, and that compares to the prior months up 0.4. On an annualized term, it's expected to be up 3.3% from the year ago month. And core is expected year over year to be up 4.1. Remember, core inflation is what the Fed watches. We'd love to see it get under a 4. Core CPI on a monthly terms expected up 0.3 in October, and that compares to right where it was in September, and everything comes out at 7:30 in the morning. So the question is, how do you want to bet on that? That's really what it comes down to. Certain people think, regardless of what it says, we're going to go up in November. I happen to be one of those. I don't look for inflation to be running hot. I expect it to be tame at best. Energy prices are always a wild card, but they're headline. They're not core. And you can't get involved in the meat prices and the grains because that's food and they're not included. It's the everyday items you have to keep your eye on. We will see, and that's going to be the key tomorrow. So after 7:30, the game starts, and then we'll see just what the market wants to do with whatever that comes out to be. Don't be a hero in front of it necessarily. When you take a look at the E-mini S&P, you can see you've come up here and you're fighting a big battle right at the 18-day average of closes. For those of you that watch me, and I know many of you have watched me for decades with my shows and everything that's been on TV, and now it's all over the internet, this is what I look at as the neutral number. That's what the market's done. If you think about it, when you're up and over it, you fall back and you often lean back and fight a battle there. If you were down, you come back, you challenge the numbers. If you're up, you come down, you challenge. You don't have to stop right at the number, but it's a zone. And that's what I think you've done. And now the market has to decide what next. Seasonally speaking, and that's all that I can tell you about it seasonally, 15 years in a row, if you came into the market in the S&P on the 26th, and you got out in December. I'm not going to give you the date here. I do that in my subscriber video. 15 years in a row, that trade has won. Does it mean it'll win this year? Absolutely not. Past performance is no guarantee of future performance. It's what it was. It's history, and I don't want to put any more weight on it than that. But when the chart action goes with history, then I get excited. And if you take a look, this market came alive where? If you come with me and you look at where this market was all the way back here, this is November. I was talking October 26th right here. That market's had a heck of a run. I'm not the only person that sees this. It's readily available to those in the know. Key is, quote unquote, those in the know out there. When you take a look at are we trending, it becomes interesting. You're not. You have a mishmash. You came down and you made a lower low on Friday than the prior low, and now you've gone back over those highs. So you have a higher high and a lower low. That is not the definition of a trend. The market's next resistance in terms of moving averages, should it go up, is here at 44.56, and if it drops down off the report, then 43.37.5 is a potential support at the 200-day average in the gray. The Bollinger Band is outside of all this right now. You'd have to get through the 100-day average to get to it at 44, let's call it 98, and the bottom one is very far away back near the lows that you were at. What are we doing in terms of momentum? The word is embedded. You have locked in and changed from being an overbought market to an embedded. You've locked in the bullishness. So until and unless the red line closes under 79, my contention is if you take my enhanced Bollinger Band course, the market is a break. There's a way to do it. It's all spelled out in the course. You don't even need me to understand it. And that's how I'd be looking at this market. It is the same identical thing in this market. Here, the difference is you have higher lows, higher highs. We can see that the market's fighting a battle at the 100-day average, trying to get to the upper Bollinger Band, again embedded. Bullish, bullish, bullish. And the Dow, no trend. Lower low, higher high, but fully embedded. In the hierarchy of technical indicators, the slow stochastic, when it embeds, is king and queen. It's everything. Transgender, I don't know, but it's everything. Got it? And the resistance comes here at 34,595 to 34,815. When I look at the Russell, no. This is the market that needs interest rates to come down. Now, there's an interesting battle in interest rates. Today, UBS and Morgan Stanley came out in huge ways. They are predicting that interest rates are going to, dare I say, collapse. I use that word this is what they're writing. Collapse as we get into 2024. It'll start moderate, and then it'll just let go to the downside as the economy slows down. Goldman Sachs doesn't see that. Goldman sees maybe 2 rate cuts. These other banks are very aggressive in how many they see at each Fed meeting, and that's the difference. So people are lining up. But here's what's interesting. All see rate cuts. It's a speed. That's the most bullish thing you could get. When we come to the notes, when you break in them, it means rates are going higher. But this market went from all the way down here, went to the upper Bollinger Band, never did embed. Classic signal, you come out. Why? Because markets only spend outside of the Bollinger Bands 5% of the time. The algorithm's designed to have that occur. Therefore, when you get up to it, it's a natural liquidation point. Get down to it, it's a natural liquidation point. You're going to tell me, but it's not the low. I don't care. You're in the zone. Zone is what everything's about when you're trading. You're trying to trend trade to get into a zone to step out of the trend with some money. That's one way to look at it as a trader. Investor does something totally different. They just step in and they'll buy because they like it. And if it doesn't work, they call it this magic word. It's an investment. It doesn't mean anything. Of course, if it goes sour and the company goes broke, it was a bad investment. If it's a great one, the market keeps on going. I was with one of my good friends, and he was showing me stocks he bought years ago. They're up 300%, 3,000% in one. It's an investment. He didn't tell me all the losers. I didn't ask because I was a guest. But that's how it works, okay? Now here, the 5-year note has fallen into the support, just sort of sitting down there, leaning away. Then we look at the dollar index. And in the dollar index, you got to the lower band. Now, what defines if you're bullish or bearish in a market overall, your main filter? The relationship of price to the 18-day average. When you're under it, I have a bias. I'm looking for potential sell signals. When a market's over it, I have a bullish bias. I'm looking for buy signals. Do they all come in? No. You can whip back and forth, as you're doing in the dollar index. You've had what we'll call a bear market rally. You've had a sell signal, and then all of a sudden, and by the way, it wasn't even a sell signal. You had a market that came down under the average, and then you had a buy signal. But when you get a buy under the 18-day average, it's a bear market rally. Do we understand that? It's the flip-flop the other way, and that's what you've got here. You have a bull market because you're over the 18-day average on the euro, and it's a break within a bull market. It's really that simple. In the British pound, again, another one of these markets that's had upside bias recently. You pulled back to that 18-day average, you held it, and the market got to bounce away from it. When we look at the Bitcoin, it's time to be coming out now and going into the next months down the road here for yourself. But suffice to say, and this is so important, a couple of days ago I was telling clients before you lost the embedded reading, you got to take half your money off the table. I did that very clearly Thursday and I think Friday. And today the market lost the embedded reading. Why? I said, you're not going to get the SEC to immediately give you what you want, and the market's already come up this much. What are you looking for? Take part of your money off the table, but if you lose the reading, you got to come out of it. As of today's close, just so you can see this, the way that I teach charting, you closed under 79. Bye-bye, Miss American Pie. If it keeps going, c'est la vie. My work says you got to be out of it and sidelined for the time being. In Brent versus WTI, you're no longer at the 460, you're at the 420 level, as everything has been rising a little bit. Now, am I surprised at the rise? No. You had an bearish embedded reading, and what happened in the reading was right here today, let me go back another day, today, you lost that reading. So, could you get more of a rally? Absolutely out of this. What caused the rally today? Well, OPEC came out and they gave us some forecasts for 2024. Now remember, they'll revise these forecasts, but the forecasts were bullish. They're looking for big deficits, 3 million barrels a day. I wrote about it in my morning report for everybody, showing them what's going on. And that was today the impetus to send this market to the upside. I look for the market to have trouble at the 100-day average in the 18. But as I look at the chart right now, I don't see anything that's screaming you want to be short anymore. I think it's time to be sidelined. The same thing would be true of that was Brent, this is WTI. And if I come back here, let me go back right to this. Here's the market settlement today, Monday. Got to be out of all shorts. Now, big part of my work was screaming it right here. But it finally said today, that's it. I think you're going to go, if you can rally any further, right on up to those numbers, the 100-day average in green, which is 80.19, to the 18 of 80.75. And if you're bouncing there, I look for the big bounce out of heating oil. And I got exactly what I wanted. I talked to you from the beginning of this month. Expect short selling at this tax time of the year for these people. You fell right into the 200-day average in the Bollinger Band. Enough's enough. And now momentum is turning back up. You don't have a buy signal. You have reasons not to be short, in my opinion. So that's a big difference in the market. In the natural gas, market came down pretty hard, got oversold, but right here, not down here. I think right here is where the pros came out of shorts. You're getting a little more of a rally. Let it get away from being oversold, but I think the market will be a short sale again. You're going, what? I think we're producing more and more crude, and as we do, we get more and more nat gas. The world's awash in nat gas. Look for it to come up, and I look for it to come down one more time. So that's where I'm at on that. Now, you see all these indicators? I don't know if you're aware of that, but I put them up in a program. Let's see if I've got this set up for you. I thought that I had. Yeah, it's right here. TradingView. Do you use it? If you do, I've created a suite of all my indicators for you, 6 of them. And how you activate them is you go to our website, the iraepstein.com, and on the client resource, you go up there and you give it a click. Once you do that, we get an email to turn it on. You fill out your information. We turn it on as you log out and back in. It's right there. It only takes up, by the way, 2 pairs. You'll get my version of slow stochastics. You'll get the swing line. You're going to get window envelopes, the moving averages I use. All of it's there. And this exactly pairs with my numerous charting courses. So if you're a student of what I'm doing and you're using this particular service for it, hallelujah, there it is. And how do you get it? I'm going to repeat. You go to iraepstein.com, and under client resources, you'll see it on the top right. Give that a click and just go in there, fill out everything you have to. We'll get an email. We'll turn it on in the business day. If you do it in the morning, we turn it out that day. But after 4 p.m. at night, we wait for the next morning to turn everything on. If you have questions, call my staff. They can work with you, and I'll see you all tomorrow. By the way, you can also click up here if you want. And what will happen is there'll be an icon that will take you right to that part of our website. I'm Ira. See you in the morning.